How's it going everyone? Mario here. We have a lot of information to go through in this video. We're going to talk about what happened in the market last week, and we are also going to talk about what to expect leading into the upcoming week. We will also go over the two important scenarios under technical analysis section. What are the possibilities that the bottom is already in on SPY? And what are the possibilities that all the moves, whatever we got on Friday, is just another bull trap? If you guys like the content, click on the subscribe button. It's free of cost. Join the Patreon for getting daily updates on price action on SPY, QQQ, and alerts and trade ideas on the stock with good technical setups every morning before market open. We have a great community with experienced traders in there. Check it out, link is down below in the description. That being said, without further ado, let's get started. Few days back, we had this so-called analyst from CNBC saying inflation might have been peaked. We had some optimism going into CPI, but I clearly mentioned inflation is no way near peak, and any downward reading in this month will be followed by a massive upside in the next month's report. With this month's CPI data in particular, even with the energy prices coming down, the food prices didn't come down by a lot, but this time the core part of CPI, especially the transportation side of things, just took off. Does this look like peak inflation, Mr. Dangerous? Did you see the energy prices in the gas pump right now? As I said in the previous video, this downside in energy will come roaring back to the upside leading into next report. Higher energy prices means get ready to pay more for airplane tickets, get ready to pay more for shipping. It is a domino effect. If energy goes up, sectors that are dependent on the energy flies up as well. We had a higher inflation reading even with the energy prices down 11%. Imagine how bad the next month report will be as the energy prices are shooting to the upside again. Did you see the prices in the gas pumps? I'm pretty sure you must have noticed the increase in prices in the past few weeks. Energy prices is not gonna go down anytime soon. The cost of food is not going to go down anytime soon. So, yes, CNBC. Inflation has not peaked. We still have more pain to come. Now, moving on to the next section of this video. Powell admitting defeat. We got Mr. Cocaine himself admitting the defeat last week, saying he was too late and he wished he had raised the interest rate sooner. Really? Did what England did last week made you scared, Mr. Powell? Hey, at least Federal Reserve is now taking their head out of their ass and accepting that they were wrong. But this is not a therapy session. I'm not gonna go ahead and say admitting the mistake is the first step in progress when the mistake is affecting the livelihood of people. He said he is still not considering a 75 basis points yet, but won't rule it out if situation demands so. Well, it will demand so, Mr. Powell, in the next few months. But guess what? You will be late at that time with the 75 basis points that the market will start pricing in even more aggressive rate hikes. Do what's necessary, dickhead. Increase the interest rates to 75 basis points. Reduce the demand that might push us into a recession short term, but we will recover. But more you postpone it, the more damage it's going to be. Forget about the stock market. Do the right thing, which will reduce the inflation. That being said, let's move on with the analysis of SPY. We're gonna make this interesting. We're gonna go over different scenarios and see how high probable they are in playing out in upcoming week. Scenario 1. Is the move we had on Friday, is that a bull trap? The probability is way higher for this one to be the case because the trend is still in favor of bears. All the major moving averages are negatively sloping, but that doesn't mean the only way we have to go is to the downside. Volatility works in both ways, and we got to be respectful of the price action. We did have a beautiful trade to the upside on SPY under Patreon. We went long at $385 with stops at $383. Current price is at $401.50. It's a 15-point trade, speaking of good risk to reward, taking it all the way to the bank type of trade. Now the question is, how long will this move last? If we did continue to push higher, don't be surprised to see a massive rally all the way to $405 or $411.50 up north. To put it simple, as long as 397 and 394 are holding to the downside, I am staying long with a price target at 411.50 before expecting any big pullbacks. But if we start breaking below 394, then the bullish scenario is off the cards as it opens door for running a test to 390 and 387 to the downside. Now, is that a bullish reversal? Does this move change anything from the fundamental point of view? Ask yourself, why the market went down and did the concerns on the drop disappear all of a sudden? The answer is still no. Until the problems like slowing economic growth, inflation, recession fears, all these are solved, going all in on longs at this bounce doesn't make sense to me. But markets can be irrational longer than you can remain solvent. For now, I'm backing the scenario that this is a bull trap and we do have more downside to come. But we are going to respect the price action and trade what the market gives us. As long as 397 and 394 is holding, we are staying cautiously long. Now to the scenario 2. Is this the bottom? Again, you got to ask yourself the same question. Does the problems which caused the big sell-offs solved? The answer is no. So, stay cautious. Seeing such bounces like this in bear markets is quite common. We will revisit this scenario if we start closing candles above 411.50, but the risk to the downside still remains at 397 and 394. Closing candles below these levels shoots the flare up in the air. Members of the Patreon gets updates on what's going on with the markets on a day-to-day basis. Check it out, link is down below in the description. That being said, take high probability trades, manage the risk wisely. See you guys in the next one.